So you can keep your camera on for a while, okay? Harshita, you can also do that.
Yes, sir, just a second.
So Daksh, you are from which place?
Jaipur, sir.
Achha, Jaipur, sir. So you can just, share your workings.
Yes, sir, I'm sharing.
Okay. So your group is number 8, isn't it?
Is my screen visible?
Yeah, I can see that. Yeah.
Okay, okay.
So it is okay.
Uh, all right. So, good afternoon. We're Group 8. I'm Harshita, and this is Daksh. So we'll be presenting on the wires and cables industry. Um, so the wires and cables industry accounts for around 40 to 45% of the overall electrical industry. In 2024, it was valued at 9.3 billion US dollars, and it has a projected CAGR of around 8% from 2025 to 2032, which is
Yeah.
relatively higher to
Yeah.
uh,
Harshita,
the international.
just a small
Yes.
question here. You said 9.3 billion US dollar. In terms of rupees,
Yes.
how much it would be? Any idea?
Um, we have to check, sir.
So it's very easy.
7.5
$1 is around, say, 87, okay?
80, yes, yeah, 87,
85,
yes.
86, 87, whatever. So this is
Right,
8,700 crores is $1 billion. Okay. So
right,
roughly
sir.
around 85,000 crore rupees. Okay.
Mhm.
Fine.
Right.
Clear. So
So,
that is how we do it.
so
Whatever is the dollar rate multiplied by, the thing. So it comes to about 8,500, $8,700 per billion dollars. Okay. Fine. Okay. Go ahead,
right.
please.
So the projected CAGR was around 8% from 2025 to 2032, which is relatively higher to the international standard, which is projected to around 4.2 to 6.3%. So as we can see, the industry is ever growing. It is pretty much going to grow at a constant rate till 2032. What drives this
Achha,
growth is,
another one question, Harshita. Why you have chosen wires and cables industry? So what made you to suggest that?
sir, because the industry is growing. I think that is exactly what I'm going to talk about next is what's driving this growth. But with new infrastructure, new technology, I think this industry is quite interesting to look at from that perspective.
So who chose this industry, you or Daksh?
So I think we decided
Okay, both of you decided
mutually.
as a group.
Yes, sir. Yes, yes.
Chalo, go ahead, please.
Okay, so the key demand drivers for this industry, as you can see, so the first one is infrastructure. Um, with these large-scale government projects like rural electrification and sector redevelopment, they require large amounts of investment and also a large amount of wires and cables. So government spending does drive this growth. With digital transformation in rural areas, setting up 5G networks and data centers, this widespread rollout also is a key driver in growth. Um, the world is also shifting to electrical vehicles, and there's a huge demand for those in especially urban areas. And wires and cables are required for this not only in the actual manufacturing of the car, but also for charging solutions. So
For
this
which
is also
installations?
charging solutions.
Okay.
Like the entire setup for EVs is in a way that we also obviously need to have a charging space for them, and they require specific types of wires and cables. Um, with the renewable energy goals that India has set, and especially in
So
India, we
tell me,
focus on.
Harshita, which is the sector, which has used wires and cables, in very big quantity in the last 20, 30 years? I mean, which is the industry, which has been using it basically? Which
Uh,
industry has, I mean, there's a big growth which has happened in that industry in the last 30 years or 25 years.
Um, Sir, I would say it was the infrastructure industry. It could also be the aerospace industry.
Infrastructure is a basic, I mean, common name, but this was a telecom industry, which is actually,
Yes, sir,
you
right.
find a lot of digging of cables and everything was done so that the network was, the dark fiber, what they called it, was spread across
Right.
India, pan India, and even, submarine cables to link international, countries. So telecom has done very well in India in last 20 years. So the telecom has used a lot of cables, okay? The dark fiber, which they call. Okay, fine, go ahead.
Right, sir, right. So, with renewable energy in India, there's huge solar and wind farms that need to be set up, and to generate electricity from these solar and wind farms, there is a high demand for wires and cables in that aspect as well. Moving on, handing it over to
So,
Daksh.
so, sir, to answer your question on why we chose this industry, firstly, we were looking at it last year as well. And last year, both of us thought this was a good value industry because of the strong growth that they've shown in the past 4 years, like from 2021 to 2024. But if you look at the actual performance of all these stocks that you mentioned here, they've actually declined in the past year by more than 10%, 15%.
Hmm.
And that is because you've had these two giants. One is Adani Group, which has announced that they're coming into this industry through a joint venture, and the other is Aditya Birla Group through their company Ambuja Cements. Now, this is a very wide sector, which it is a lot of different kind of needs. Like one is obviously you have EPC contracts with the government and all these large companies.
You said
But
Ambuja Cements, isn't?
yes,
Ambuja Cement is now owned by Adani's, okay?
no. Aditya Birla Group.
Aditya
These two
Birla Group.
giants.
Okay,
So one is Adani and one is Aditya Birla Group, but they're getting to different sectors of this
okay,
industry.
sure.
So I think Adani is aiming more for EPC contracts, whereas Aditya Birla Group, I go back, yeah. So Aditya Birla Group is getting to more of a FMEG, which is fast moving electrical goods market, which is why the market has basically discounted these stocks based on that when these companies do come into the market, uh, the market share will be taken up by them, which is why you'll see that Polycab and KEI and Havels, which are the incumbent top three market leaders in the industry, have seen a decrease in the share price. Now, obviously, we've taken wires and cables as an industry, but we've sort of bifurcated this into two segments, which is one is FMEG, to the cover, towards the consumer electronic goods, where you have more dominance by Havels and Polycab. But then you also have companies like KEI and Universal, which are catering to EPC contracts, and they're also in a higher price segment. So while you can compare them on a one-to-one basis, they're a bit different in terms of what kind of customer they're selling to, and also what kind of product they're selling. So moving on, if we go for the next slide, Ashara. Yeah. So in terms of growth, like Ashara mentioned, we've had um, post COVID, we've had increased government spending on infra, and even if you look at like you mentioned, telecom, I think that's slowed down a bit in the past 2 years in terms of infrastructure spending on telecom. But if you look at infrastructure in terms of residential complexes and then the connectivity across these complexes, especially in like tier two cities, that has grown a lot, which is why you'll see almost double growth in EPC contracts, which is why we can see companies like KEI and even Finolex growing very rapidly in the past 3 years. Now, even our cable to that fact. So in terms of that, the industry grows. It shows significant promise, but because of such good promise, you've had a lot of increased competition. So while the industry is growing as a whole, you've had a lot of competitors, which I just mentioned, like Adani Group and Aditya Birla Group. So currently, they've now entered the market. So let's talk about the incumbents, which is IR Cable. They have the highest revenue CAGR, but that is because they've signed a really big contract with the government to basically work in north of India mostly. And I mean, they were in the south, but now they've had more business coming from the north, which is all thanks to your UP government as well. And Universal Cables now current it's also a newer company in terms of, and also a smaller company. So they've started investing heavily into capex, which is not yet quite turned out for the revenue growth, which is why you can see that it is the lowest out of the seven. And in terms of net profit growth, we can see Dynamic Cables growing, but that is because they've not really invested so much in capex anymore, and they're, I think, sort of on the maturity stage. If you can go to the next slide. So let's talk about the efficiency analysis. So in the Excel, we've done DuPont for all the companies, and we've taken these three ratios: NPM, asset turnover, and equity multiplier, to sort of realize and understand not just by the P ratio, but understand the operational efficiency of these companies and how they're making their profits and what's the level for that. So, I mean, of course, you'll find it in much more detail on the Excel, but I'll just give you a snapshot of the companies. So at a glance, also just a note here. So the equity multiplier, we have done it red and green, but that's not really useful to you because that represents the leverage for the company. So I'm not sure if a higher leverage is a good thing or a lower leverage is a good thing, because depending on the investor's objectives, you might look for a growth company. So a higher equity multiplier like Universal's 1.9x might be optimal for you, but if you're looking for a more stable company, something like a 1.4 from Polycab might be optimal for you. So let's not focus on that point, whether the equity multiplier is above or below the industry average. But on a general basis, we have taken the industry average for each of these metrics and then compared the individual companies to it. So if you want me to go by company by company, I can start from Polycab. It has
No, no,
shown
no,
very
it's okay.
strong net
Just
profit
I want to
margin.
know that,
That is given
sorry.
because it has a very strong distributed network, and it has done backward and
Okay,
forward
just
integration.
to let you understand, this is basically net profit margin, which is 7%, multiplied by the asset turnover. This is 1.3, then multiplied by 1.5, it comes to 4.14.2. Is it?
Yes, sir.
It's a DuPont this thing equation
Y-
basically, where you
Yes, yeah,
see take the industry average of net profit margin of all the companies you have given, what is the margin,
yeah.
what is the turnover. So in terms of turnover, which is the company which is doing fine in terms of turnover maximum? RR
Polycab.
Cable, huh?
No, that's the turnover growth. But in terms of
Asset turnover.
absolute
I'm saying asset turnover.
asset turnover, the highest is RR Cable.
So what does asset turnover means to you?
So it means the sales by total assets. So it shows how much the company has invested into its operations in terms of debt and equity, and what kind of sales is it able to achieve from that. So we've seen that RR Cable has been successful in that. They've
Okay,
used,
Daksh, just hold on. Asset turnover, of course, you can check, but asset turnover would be basically, like suppose you have an asset of, if it is if it is 1.00 like Fenelux, so that means their
Mhm.
assets and their turnover is same. Okay,
Yes.
fine. So the more the turnover with the asset being on the denominator and turnover
Mhm.
being on the numerator, so that means you are sweating your assets more. If for
Mhm.
example, if you are efficiently using your assets and generating the maximum sales out of it. So we would say like 2.2x for RR cable would be that they're turning over their assets two times. Okay, their sales is 2.2 times than the asset, isn't it?
Right, sir.
And
So this
if you look at
basically,
Universal, they're not using their assets well, and their net profit margin is also very low. Okay, so that's why return on equity is only coming for. So asset
so but,
turnover is basically how better or how better
Mhm.
you're using your assets. I mean, whether you're sweating your assets or not. How efficiently you're using your assets. Okay, fine.
Right,
The
right, sir.
more, the better. Okay, like a figure of 2.2 would be that you're doing twice the amount of sales I mean, with a given asset of one. Okay, so
Right.
for every asset of one, how much turnover you're able to do. Okay, and equity multiplier.
So that's basically the sort of, it's not exactly the leverage ratio, but it's basically how much debt you've taken on with respect to equity.
So again, that means if your equity multiplier is 1.4, so if
Mhm.
you're using more debt, so that means you're more leveraged, isn't it?
Yes, sir.
Fine. And we all know that, cost of equity is higher than the cost of debt. So if you choose a cheaper source of finance, which is debt, and have a higher equity multiplier, it is going to basically, be good for generating a higher amount of profit. Okay, fine. So
right.
equity multiplier का formula क्या है? Debt upon equity, is it?
Yes, yes.
Okay. ठीक है, चलो.
Right. So, based on that, like also in terms of asset turnover, it's nice to have like obviously it's sales by total assets, but then we also analyze the return on equity in terms of how much debt they've taken on. So, if we feel that currently the asset turnover is low, like for example for Universal, it is only zero point 0.7, but it does not reflect the full picture because Universal has been spending quite a lot in capex. So this year or the last financial year, they didn't realize a lot of sales, but moving forward, we can say that they're going to realize sales from that capex that they've had, which is why the assets are very high currently, but the sales are not so high. So there's obviously, when we look deeper into the ratios, also you understand why the ratios are such in that way.
Hmm.
So moving forward, I think like okay, last time, sorry, go back. Just a closing note on the ROE. Uh, on standalone basis, Polycab seems to be the highest ROE. I mean, it is the highest ROE, but the market has also acknowledged this fact and priced in that information. So we're trying to understand from these figures the future ROE that the firm can realize. So while these numbers really do look good on paper, like Polycab is in 20%, how sustainable is that growth and how sustainable are those margins is the question. Yeah, moving forward.
So, again, going back to your earlier slide, the slide is very good, what you have shown basically, okay? Fine. This slide is wonderful slide, but थोड़ा सा इसको elaborate करके, I mean, you should have understood it in a more detail. I'll just go through what you said basically when I just watched the video again. But
Hmm.
ये अच्छा करके इसको capture कर सकते थे. मतलब that was, you could have done a little far better than what I think what you have done so far. And
Right.
ठीक है, चलो आगे चलो.
So also, sir, we've done very detailed on the Excel. So if you look
हाँ,
through it,
इसको
you'll
आपने एक्सेल से निकाला है. ये जो
so
कौन एफिशिएंसी ड्यू
we've
पॉइंट.
done we've done due point on a single sheet, like different sheets for each company, and it's a very elaborate due point for every
Okay,
company.
okay, okay. Just show me that. I mean, are you going to submit those as I mean, workings, isn't it?
Yes, sir. We'll put on a drive. We'll send it an email as well.
Sure, sure.
Next slide, Harshal. Right. So coming to the profitability, of course, we've seen the ROE, but now let's look at the operational profitability for these companies. And again, now just to add to a note that all these companies, some of them deal to a different market. For example, KEI deals to the EPC market, while Polycab and Havells have their own distribution channels for consumer like D2C and also like FMEG, where they're dealing through these dealers and distributors and retailers. So obviously margins would differ, and we can't assign an industry average per se for the entire wires and cables industry, but it is nice to have a reference figure to see, sort of have a baseline. So we've
No,
taken
I
the
couldn't get it. You're saying the industry average is around 11.4, the last, bar. And then each industry has its own EBITDA margin. Some have 14.7, some have, as low as 7.1. So, but
right.
you're saying that each industry is unique in itself because it is catering to different markets or different products or whatever. So we can't have a kind of a thing that we can say, we can't really say that, the best is 14.3. Of course, 14.7 is the best polycap because
Hmm.
it has the highest EBITDA margin. But what was the
Right.
constraint you're talking about that why they can't be compared? So, I mean, this thing.
Because they're getting to different markets. So let's say if KEI is dealing with EPC contracts with the government and large infra companies, Polycab and Havells are dealing towards more the D2C, the retailer consumer,
Okay,
who's
so they
only
are
buying.
catering to the Havels is like retail market. Okay, and which one
Yes,
is doing to the government sector?
KEI.
KEI. So that's why it is having the lower EBITDA margin. And Havels is having 11.5 because it is catering to the retail end, isn't it?
Yes.
So,
So
which, हाँ, ठीक है, चलो. And
so
Polycab?
now
Polycab is doing what? Supplying to whom?
Polycab is also exporting most of its products. Like they're reaching out. Even I think Finolex is also expanding outside, but Polycab
But
is
एक
very
मुझे चीज
diversified.
समझ नहीं आई
So,
दक्ष, अगर जो एक्सपोर्टर होता है ना, जनरली वी से दैट व्हेन यू आर एक्सपोर्टिंग you
mhm,
operate on very thin margins. Okay. But
right.
when you're selling in the your domestic market, you can, you get some higher margins. Okay. That is general belief. because export is more competitive than, selling in your
Hmm.
own country. So Polycab, if it's an exporter, is having the highest margin. That I really, it
So,
basically is
Polycab also has its own backward raw material companies. So they've integrated, like they've obviously acquired and grown their own companies which supply the raw materials for them as well. And
okay.
Polycab is one of the biggest names in domestic market as well. Like I think Havells and Polycab are the biggest names in wires and cables for D2C
Okay.
market.
So they have done a
So
backward integration. So they have the, source of inputs and everything tied up to their, company. So they are able to maintain more margins because of that. That is what
right.
you're saying. Okay. Fine. That may be the right thing. Okay.
Uh, Yeah, and also in terms of pricing power, sure we mentioned that Finolex and Polycab seem to have better operational cost control and pricing power. But again, it also like I mentioned before, it depends on who the consumer is. If you have EPC contracts and infrastructure projects, large scale, then your conversations with them are much different to a generic, let's say, Havells selling to the consumer through a retailer or a distributor. So in terms of that, pricing power also differs, which is why it is important to look at the numbers in detail, which we've done in the Excel as well, and we've mentioned every single
Okay.
point in terms of. Hmm.
You can go ahead.
I think Harshad, I can take on from here.
So coming back to the EBITDA margin, like we did a similar exercise, when I was working in telecom.
Hmm.
So we used to have, like Airtel, Reliance, I mean, Idea Cellular, Vodafone, that time a separate company. So we were trying to understand, why, Idea was having a lower margin than, Airtel. Okay. So because Airtel was that time the benchmark. And so whether we can also replicate that kind of a margin or not. So we are looking into, why we are having a lower margin by about 3 to 4 percentage points compared to Airtel. Of course, there were some weaknesses, which was, we were a very new player and we were operating in Delhi. So we had a network which was, consuming a lot of cost, and the signal strength was also not good because we were the fourth player. So because of that, we needed two towers compared to one tower by Airtel. So that's why, we were expensive. We required more towers, we required more rooftop towers to cover the same area than what Airtel was doing it. So that definitely our margins will not be the same as Airtel. Okay, so there were some reasons for it, and somewhere we were not, we could compete, and we were spending more, so we tried to cut down and improve our margin. So whole exercise was done. How do we, see that we meet the industry's benchmark? Okay, so a better margin is a very, very important kind of metrics, basically to find out, why one company is doing well, why not other, why the other is not doing, and can it bridge the gap in terms of EBITDA margin? Okay, chalo, aage
So
chalo.
also, there's one more thing I want to add just to make the picture a bit clearer for you. So if you look at the market share pie chart that we made, and if you add all of these companies' market share up, that only accounts for about 60% or 50% of the market. So the rest of the market at 50-40% that you see is actually taken up by the informal sector, where you have these manufacturing units in Gujarat, Rajasthan, and even UP that make cables, but they're not branded as much as these companies. So while the D2C market, like people like us who are buying homes and trying to get wires installed in our homes, we're always going for the brand such as Polycab or Havells. When you look at these large EPC contracts, you have a lot of competition when tenders are given out. So these distributors give out these tenders to really small manufacturing units that make wires and cables,
Okay.
right? So which is why you see that the margins have been driven down a lot in the EPC and large infra project sector.
So do you have any background with regard to wires and cables? I mean, some industrial background or something in it? Or
No,
so,
sir.
or is it just theoretical knowledge you have gained?
So it's just reading the annual reports and listening to the
Okay,
con calls.
okay. Nobody in the home was into this kind of industry.
No, so we've done manufacturing, but not for wires and cables.
Okay.
So
Chalo, go ahead.
Okay.
Okay, Harshit.
So, also to add to another point in the EBITDA margin is that we see Finolex is quite high compared to the industry average. This is also because it is vertically integrated. It significantly reduces their costs. They, I think, specialize in copper wire specifically, and they have their own. They're completely vertically integrated, so that also reduces their costs significantly.
हम्म। So
Moving on to
wires में,
value.
sorry, wires में क्या क्या लगता है raw material? Like copper, you said, like copper wires. So what are the other kinds of wires, which are there? I mean, one is the raw material would be copper.
Yes, sir.
और कॉपर के अलावा और क्या? I mean, what other metal is used for making, the wires?
So
Any idea?
reinforced rubber and also steel for coating.
Okay.
And then you have a lot of
नहीं वो
these.
तो ठीक है for making the the fiber, like you said, copper wire. Copper is
Yes.
the main raw material. Okay. So any other form of wire which uses some other kind of a this thing other than copper? I mean, of course you would be using rubber and other things for making the the wrappings and everything. But copper के अलावा क्या लगता है? Is it I mean steel or what? भाई कॉपर वायर्स तो हमने सुनी है, कॉपर
So
वायर के
they
अलावा भी
use
तो कुछ।
they
हाँ
use aluminum a lot,
हाँ,
and
एल्यूमिनियम एल्यूमिनियम।
there's also silver and gold involved because they're very conductive. So
ओके
if you look at EV charging wires, they're a bit different compound. They use some aluminum and gold and silver.
ओके ओके, चलो गो अहेड, आगे चलो हर्षिता।
Yes, sir. So coming to the valuation metrics, we go into a lot more detail about this in the Excel. But at a glance, you can see that Havells and Polycab are quite premium valuations. They have high multiples with the PE ratio at
So you are saying that
55.
the green ones are with the highest multiples, isn't it?
Yes, so the green ones are the highest two, and the red ones are the lowest two.
Okay, so let
In
me just have a look. Like Polycab
yes,
is
yes,
green for 5 out of 3 metrics are in green. That is
yes.
price earning, price to book ratio, price to sales. EV to EBIT and EV to EBITDA, Polycab is low, okay, compared to others. Fine.
Yes, I mean, it's not as low, but it's not in the lowest quartile as
Yeah.
well.
And then which is having the lowest price earning multiple? Dynamic cables, okay?
No, so the lowest price earning
RR
multiple
cable.
RR cable has. Yes.
So what would be the reason for they having a very low price earning multiple? Is it
There could be a few reasons. Just since Polycab and Havells, they are more commonly known. They have better brand recognition. They have better penetration. Since they do also deal with FMEG products, RR cable, I think, just
Harshita, एक चीज बताओ देखो,
yes.
there are two things on which the P multiple hinges. Okay, why a company will have a higher P multiple? Uh, there are two possible reasons. What are those two possible reasons? First, we know that, then we can pinpoint why these are high or why these are low. तो दो फैक्टर कौन से हैं? दक्षिण
The
दक्षिण
price and earnings
हाँ
per
So
share.
नहीं, I mean it's a price. I mean the numerator is pi and earning is on the denominator. So what are the two
Yes.
factors?
so I think it's more about the growth potential of the company.
Huh, the
So
growth. I mean, of course, the earning growth, as Harshita was saying, earning. Actually, the right word is that the company which is growing at a much faster rate, will always command a higher P multiple. Okay. So, Polycab and Havells should ideally have a higher growth in future. Okay. So that can
Right.
lead
So we
to,
will talk about that in the
yeah,
next
yeah.
slide.
And what is the other factor which can lead to, price earning? This thing, two factors, which is, one is the growth and other is the risk, basically. If the
Okay.
stock is very risky or the business is very risky, then it may command a lower, P multiple. Anyway, चलो आगे जब बात करोगे तो देखेंगे.
Yes, right. So, yeah, so Polycab and Havells have relatively premium valuation. They are more known names in the market, they have brand strength. So which would indicate strong investor confidence and profitability. And since they are involved in more FMEG products as well, I would say KEI and Dynamic Cables have relatively mid-tier valuations.
But tell
With
me,
one out.
I mean, let me know that all these companies are similar in terms of, their size. I mean, in terms of market cap, or maybe some of them are very, very low in I mean, the sales basically. Or sales we
Right.
देखो. So in terms of
So,
sales, if there is a very small company, then we can't compare at all into this. Okay, if all are equal sized or comparable, then we can say that we can have a good comparison of everything basically. अगर
sir,
किसी की टर्नओवर सिर्फ 1,000 करोड़ है, दूसरी की 10,000 करोड़ है, okay, or maybe the market cap we can assume if there is a vast difference, one is a large cap, another is a tiny cap, then we can't compare them basically. Okay, then we can't have a meaningful comparison of these
In
metrics.
terms of market cap, Dynamic Cables has the lowest market cap, I think around
Is
2,000
this there
crores.
in your
Yes, sir. This is in the
market?
Excel. This is in the Excel.
Acha, in the Excel. Okay, that will, I mean, see it later. Okay.
Right. So in terms of market cap, Dynamic Cables and Universal Cables are pretty low, around 2,000 crores, and Polycab and Havells are higher, I think around 100,000 crores.
Okay, okay.
Yes. So
So these
with
companies are basically, all these company, Polycab, Havells, and KE Industries, basically, they would be,
right.
I mean, sitting at the top end, basically, in
Yes,
terms
they're
of
industry leaders. Sir. Yes.
industry leaders. Okay.
Yeah. But KEI is still relatively smaller in terms of market cap compared to Polycab and Havells.
Hmm. So basically, they are retail
Uh,
ended. Basically, everybody buys either a Polycab or a Havells. Like suppose we have to buy cable for our home. So we'll be
right.
buying, the box will be either Polycab or Havells, generally.
Pretty much on, especially on a consumer level instead of a government level, where there are not these huge contracts and we're just going to the shop and buying cables. Then yes, they will most probably be
And then,
Polycab or
one more
Havells.
thing which I have noted, a Finalex cables, okay? They are basically
Hmm.
making industrial cables, isn't it?
Yes, sir.
So any company which is catering to industry, and any company which is catering to retail, a retail segment company will always command a higher P multiple because it will have a great growth, prospects. Whereas a company which is catering to industry will have a good growth prospects, but it will command generally a lower P multiple. Okay.
Right. So the P multiple for Finolex is higher than Dynamic, Universal, and RR Cable, which is yeah, which completely is in line with what you are saying,
Okay.
sir.
Okay. Okay.
Um, yes. So moving on, let's talk about the growth metrics. So this is quite a contrast from the last slide. As we can see, the EPS growth for Universal, RR Cable, and Finolex Cable is higher than the industry leaders, which are Polycab, Havells, and KEI. And Finolex has the strongest earnings per share growth, so as you were just mentioning, since it does cater to more industrial and large scale projects.
But growth के
Uh,
हिसाब से तो like Finolex is having 27.24% growth,
yes,
and this is 24. Okay. But again, as we have calculated the growth, okay, now it isn't on the basis of the next 3 years, average growth, isn't it? Because the growth EPS is based on the future growth of the earning per share of all these companies, isn't it?
yes, sir, yes, sir.
And you have got the number from which site? Trading
So
view.
trading view.
Trading. Okay.
So also, if I may add one line, if you look at the copper prices, which is the main raw material for these cables, that has been very volatile in the past 2 years, which is why you see that uh, smaller scale companies like Universal, RR, and Finolex, they've been able to perform better because there obviously demand for copper is not that high as much as Polycab and Havells. And Polycab and Havells also have their own backward integrated copper supply chain. So I think while it might seem that they might have better price control over the raw materials, somehow the smaller companies have performed better in terms of keeping their costs lower and increasing their EPS.
हम्म, ठीक है. Okay.
So, okay, coming back to the growth metrics, Polycab, Havells, and KEI were all quite premiumly valued, but they have moderate growth rates, as we can see. Looking at their peg ratios, RR Cable, Universal, and Dynamic have very low pegs, around below 0.5, which suggests that the market has definitely undervalued their growth potential.
But एक चीज है,
And
Arshita, all these companies are around a growth of 20%. Okay.
yes,
Fine. A
yes,
20% growth in earning per share on an average of the industry around is a very good, growth. Every
right, sir.
year, even if their profits are, growing by 20%, close to about some company like the Dynamic is 16, Finolex is 27. So all are within the range of, 18 to 22 or 25, okay, which is a very good growth industry. So this industry is very good in terms of, how it is growing in the market. So, and then, each company is valued differently. As we see the PEG ratio, okay, like
Yes, sir.
Polycab and
Looking
Havells
at the
seems
PEG
to be
ratio,
highly valued. Yeah.
yeah, we can see that the industry leaders are overvalued, whereas the companies with the highest growth potential, they are significantly undervalued. Besides Finlexivs, which is relatively balanced. Um, yes, moving on to our recommendations. For Polycab, it trades at very premium multiples, has high P ratio, high EV multiplier, but this premium is justified due to its brand recognition and diversified offerings. Um, the earnings per share growth is also quite high with 19%. The PEG ratio does overvalue it. I think it was around 2.9%. We saw that it has a high ROE, I think the highest, and it is driven by strong margins and efficiency. EBITDA margin was well above industry average if we go back and look at the profitability slide. So since this is a market leader with strong fundamentals, the premium valuation is justified, and our investment stance would be to buy.
Okay. Archana, is this your last slide?
Yes, sir.
Okay. Now, I think you've done a good job. You can just,
Okay, sir.
share the Excel sheet to me. I can just go through. If I have any question, I'll come and ask you.
Right, sir.
So we are going to
Okay.
end your presentation. So, but I would like to understand, both of you are finance students or
Yes, sir. Economics and finance.
economics and finance, and this is your final year,
Yes, sir.
both of you?
Yes, sir.
ठीक है. I mean, of course, your presentation was very good, and you have covered, almost everything through the slides. Fine. So it was good.
Okay. Thank you, sir.
Okay. Thank you.
Thank you, sir.
Thank you. So next we'll have Srishti. After 5 minutes, we'll start. Okay.
All right, sir.